Let me see. So if you see my screen right now, this is the high that I marked earlier, and we didn't sweep it on the NASDAQ. We might have swept it on the S&P, but the NASDAQ, we did not sweep it yet. We just made another equal high to it. So I'm hoping that that market open at 8:30, we manipulate, or not manipulate, we come down, maybe like retest of this order block or something, and then send us up again to sweep this target on the NASDAQ. And then maybe around 8:40 or 8:45, I start looking for a short position. I know currently it is a bullish. It's a bullish market, and it's a bullish idea for me. But what I'm looking for is a sweep and then going the opposite direction. So what I have currently is buy side liquidity to be swept and then go short. If market open decides to explode to these highs, that would be better, but that's too far. That's $100 or $170 move up, but NASDAQ can't do it, so I'm not sure. If it's bullish, I'm hoping to get like a retracement here, 8:30, and then starting going up. That's if it's bullish. If it's like confirmed bullish on the big time frame and like for a while, it's gonna go bullish. I'm not sure. That's 8:30. We went up and that looks like a sweep. It's a really clear sweep there. We went up, swept up, so that's probably the manipulation up, and we might distribute down to this area, the inverse fair value gap, and then midway into AM session we might reverse. I don't know, kind of tricky. Might continue up, I don't know. Your smile keeps playing, your miles away, yeah. I would go overseas just like that. Don't overthink it, why can't you stay? What do you think so far?
I think for the most part it's looking bullish, but I'm not sure yet what side it's gonna take. Just because we're coming out of a consolidation area, so it can decide to manipulate up and then distribute down, or manipulate down and then distribute up. Either way, it needs to give a breakout during this AM session. A breakout out of the consolidation area that we're in on the 15 minutes and the hourly charts. And yeah, that's pretty much it. trying to see if the S&P and the S&P gave another SMT diversion at the highs. We just created a higher high on the S&P and creating currently a lower high on NASDAQ. I'm not sure if it's gonna get caught up with the S&P and continue in the direction of the S&P, or decide to reverse within the 850 macro, because we're approaching that macro as well. Currently looking at 30-second chart, and I'm watching it. Market,
so hard.
yeah, market structure shift under those lows. I think that's gonna. Yeah, I think a retracement to this displacement down is gonna start the move down. We might actually target the lows of the London session with this move. It might manipulate down.
Well, if it's
like I said earlier, from this consolidation, even if it's bullish, it can still manipulate down and sweep liquidity before the move up.
Well, if it is bullish, then the max retracement to it should be London high, not low. Kind of like a retest of the market structure shift, which is what we did. One candle, $50. Good. Good. 833 candle, or yeah, 833 and 834. 3-minute candle is so long, man. 5 minutes.
That could be the stop hunt as well. So
that's a really large stop hunt. The stop hunt, I think
it shouldn't be.
Yeah.
It shouldn't be a stop hunt at this point. I think it's just market structure shifting. Already did on the 30-second and the 1 minute. It's doing it on the 3-minute as well.
And the 5 minutes already done it.
Yeah, so it's pretty much gonna market structure shift to give us that sell first, sweep of liquidities at the bottom, and then we go from there. There's gonna be a reversal for sure at the lows. There's an interesting inverse.
Yeah, that's
on the 30 seconds now.
On the 30 minutes?
30 seconds at 30 the top.
No.
That one right there. Might give a reaction.
I'm not trusting it. We might still be bearish for the time being, because we haven't traced to the equilibrium or the 62%. Look how the 62% coming in this inverse on the 15 minutes. So if it is bullish, I feel like we have to come down here to retest this area.
I was thinking of taking a short off of the inverse if it gives a tap off of the bullish inverse at the top, and then targeting that Fibonacci level
Yeah, that's too much risk for me.
Yeah, too much stop loss. Maybe from 50% is a little bit better, but still about $18 of stop loss, I think, from 50%.
Let's see. So that's the 50% right there. And
Yeah.
let's put it up there too. So that's the 50%, the retest of this market structure shift. I don't think it's gonna respect it.
Yeah, the way it's going right now, it doesn't look like it wants to respect it.
Yep. So what we have here is another inverse. So this is a stop hunt, like you said, might have been a stop hunt. Another inverse here, because we eventually, like, we're still bullish up to these equal highs, but I'm not sure if we're gonna get it today or not. It's a little tricky today. Plus, uh, the day before CPI and FOMC minutes, really tricky.
Looks like it's doing another seek and destroy day, uh, where it's taking out the low and then taking out the high as well.
That's too much risk for me. I'll I'll wait until like maybe 8:50 or something.
Yeah, I definitely don't like the fact that it dumped about like $50 down and then it retraced all the way up like that.
Yeah. It might still be bearish because I mean if this is like the top that we swept, this is the Fibonacci 62% retracement, and that's 70% retracement. It makes much sense to take a short off of here. Cut loss at the high, take profit partial here, $42 price action, or take all your position off here. It makes sense, but I don't like these explosive moves. I
Yeah.
don't like having higher risks on the table.
And now we're heading towards the high again. I think I might leave another S&P diversion if it goes targets the high, because the S&P right now is the one that's left behind now. It was higher than the NASDAQ, and now it's currently lower than the NASDAQ. So if the NASDAQ goes up and sweeps the high, I believe that that's going to leave an SMT diversion where the NASDAQ is going to be behind.
Mm-hmm. Will you be interested in a short then?
I'm not quite sure, to be honest. After this explosive move up after the dump, it would be hard to take a position, because it no longer basically respects the idea that I wanted it to respect, the sell that I wanted it to give pretty much to the lows first before going higher. It really didn't give much of a retracement to the downside, Fibonacci wise. It did take a little bit of consolidation by going down when market opened, but it's still not enough for me to determine if you know,
Mm-hmm.
there's a direction, a clear direction yet.
Yeah. Yeah, it's definitely not looking good right now. But it does make sense to me. If we're still bullish, we need to come down to the equilibrium or the 62% retracement.
Notice how I swept the consolidation of the candles at 726 on the 1 minute. See that 726 wick that it swept perfectly with that dump before going back up?
Yeah.
Yeah, that was a consolidation from pre-market, and I think that it makes sense for it to stop hunt or sweep down there like that and
Mm-hmm.
then reverse up. But I still don't trust a buy up here, because obviously that could have been just a a reaction to then do another liquidity sweep and then continue down if we do end up being bearish for the AM session.
Mm-hmm.
I think the way it's looking right now, though, I think that there's going to be two different biases for the day. One for AM session and one for London session. They're not going to have the same bias. They're not going to have the same direction. Yeah, now we can clearly see a difference between the NASDAQ and S&P 500. The S&P is much lower.
Mm-hmm.
And that's a good sign now for me. I might actually be interested in a minute because that's now happening inside of a macro. When the first dump took place, it was outside of the macro timing, and it really didn't make sense. It just dumped when the market opened, so it looked a lot like a stop hunt. Now it's looking a lot like it might be setting up for a move within the macro and giving the beginning of a smart money reversal with the S&T diversion at the highs. So that might be an idea that I might look into, but it's still developing, so it's still too early to tell. Okay, just inverse the 30-second now. Started dumping again.
That's crazy.
It's inversing. Yeah. Yeah.
Crazy.
This makes a lot more sense to me than the first dump, to be honest. We're within a macro right now, and it gave an S&P diversion within the
I
macro.
think this is just the retest of the inversion that it just. I think
it might be that. Yeah, it might be that because I was just about to say that the S&P went down and swept the low. NASDAQ is way far off.
That's bullish to me.
Yeah, it's actually giving an S&P diversion at the lows now. But this is the thing: when it leaves diversion at the highs and the lows, I just leave it until one of the two is taken out.
Yeah, I don't like the S&P that is happening on the S&P. That's why I'm not getting in along right now. But
yeah,
it
exactly.
Does look really good, and to me it is still bullish.
Yeah, as of right now,
price action, but I don't want to jump in it too late, because if I jump in it too late, then this means that my stop loss is like $20, and I don't want to do that.
Yeah, it would have to like make a new swing and then a new retracement for you to be able to take a good entry without having a stop loss that's massive. The problem is and right now it just placed SMTs at the highs and the lows. Usually when that happens, that means that we're pretty much gonna range in between those two SMTs and consolidate in that range. For that reason, I would just wait until one of the two is taken out, to be honest. Whether it takes out the SMT at the highs or the SMT at the lows, but it has to take one of the two SMTs out before taking a side.
But if we inverse this bearish fair value gap, that's for sure we're going to these highs.
In my opinion, and this is the thing too, if we take out the SMT diversion at the high and just leave the SMT at the lows, that means that we're gonna go up and continue up because there's the SMT at the lows that was given, and that one was the one that was respected, and we're gonna go up because we left SMTs at the lows. If we do the opposite, then it's gonna be the opposite of that. But before one of the two SMTs taken out, we're just gonna consolidate pretty much in a range in between those two S&Ps, and that's exactly what's happening right now. And if you look at the 30-second, you're gonna see that we slow down massively after this move up and move down. We just now are slowing down, and we don't know which diversion it's gonna take out yet. Right now, it looks like it's going towards the S&P diversion of the low, and if it takes out that one, then I'm gonna be interested in a sell idea to get a deeper retracement, maybe in the 062 level, like you said earlier.
Are you gonna
that would be a great
in
target. No, sell to the 062.
Okay.
Because yeah, I wouldn't be too confident. Like I said, it's because we're in a consolidation. It could completely ignore the Fibonacci and completely ignore those levels, and just it could completely ignore the levels and just dump until we sweep the whole consolidation range, which is pretty far from where we're at right now. So it would give a bunch of down.
Yeah, the S&P is at the equilibrium level now, so that means, and the NASDAQ is not. So
yeah, but being that it is at the equilibrium, if it starts giving reactions right there, especially because right now the NASDAQ is at the very beginning of the inverse on the 30-second, the inverse to the upside, that could mean that right there we could give another another start of a reversal. That's the crazy part. We're reversing from buy side to sell side, and that's why I don't want to partake in anything right now, really. There you go. There's the dump that I was looking for. It's heading towards the lows. If it takes out the current lowest point that it left on the chart as of right now, since market open, then yeah, that's pretty much is showing me the bearish intention, and showing me that it didn't respect the S&P diversion at the lows, and it's just continuing.
We're leaving 3 equal lows on the S&P from 545. Now we touched 62%. I believe if we're bullish on the S&P, we might go down below this consolidation, react from the inverse, and go up if we're gonna continue up. S&P, and here is the inverse.
It just now disrespected the S&P diversion though, because the NASDAQ made a lower low as well, so they're both making lower lows now. Now we wait for it to dump further to be able to determine where the sweep will happen and where we're headed exactly. As of right now, we're going in lower lows and lower highs. Yeah, we just broke structure under the previous low on NASDAQ. The 1 minute candle just closed. Break of structure on the 1 minute. And the inverse on its way down, and it inversed a couple fair value gaps as well. That could be good points for retracements to take a short off of. But I think that the main idea right now is still a short until we get to a lower point on the NASDAQ to be able to determine where we're going to start buying up from. So yeah, there would be 2 approaches to this really. You could take a sell to those interest points for the buy idea, or you could just wait until it dumps and enters those interest points for the buy idea, and then determine there if it gives a reaction good enough for an entry on the buy.
We're still consolidating on a larger time frame.
Yeah, for sure. But on the 15-minute, it looks a lot like we exited the consolidation area to the upside, as I call those like a fake breakout. We exited the consolidation area to the buy side, and now we're going back into the consolidation area, meaning that we're most likely going to target the lows of that consolidation area. I think on the top step X chart, for example, a good number to target would be 263, which is like still $90 away. It's still early, but yeah, it might actually go down and target those wicks to the downside before it and determines a direction. So either way, I think that that sell side of consolidation will be hit. Just need to find a clean breakout to take a sell from, because and a clean breakout and a clean retracement off of this swing right here, because it was the swing within the macro, and we did respect the SMT diversions at the high and disrespected the ones at the low. So I think if it goes up a little bit now and retraces to maybe the inverse that we left going down, we might actually be able to take a cleaner sell from there, because it should clean dump after that. This one makes a lot more sense now. See what the S&P is doing. S&P just reached the consolidation area pre-market, 6:30 a.m. that was left on the chart on the 1 minute, and it's giving a slowdown down there. Starting to respect bullish order flow on both S&P and NASDAQ, so now we know that a little move up is coming. We don't know if that's going to be a retracement or another reversal of trend, but as of right now, it might be looking like just a retracement. Alright, this candle is going to determine a couple things, because now we could actually leave another S&P diversion at the lows, paired with this slowdown that the S&P had after sweeping this consolidation pre-market. It might actually mean that we might start going up from there. So I want to see, I'm interested in this candle and the next candle on the 1 minute chart. What do you think?
I was looking at this bearish fair value gap that we're respecting it, and we took this low with it, and these consolidation, respecting it with this bearish candle. It was like going down pretty good, and it was leaving a big gap, but now it closed it. I thought if we would like sweep these lows, and then if I started seeing a momentum candles up, might be interested in long, but I don't think we'll see that. It might still be bearish.
Yeah, you pretty much have the same idea as me. It just looks odd that we slowed down right there, right after the S&P swept the major consolidation of pre-market. So yeah, with a momentum candle right there after the sweep of the liquidity, we might actually see a reversal right there. I'm looking pretty much at mostly at 30-second rejection block at the bottom. That rejection block on the NASDAQ is one of the things that are going to determine for me. A tap of that a tap of that rejection block and a rejection off of it, paired with some sort of momentum move on S&P as well, or some sort of S&P at the low, could be the start of a reversal. Yes, definitely. But right now it's just
Chopping.
consolidating. Yeah, it's chopping around that area, so it might actually chop around and then break out to the downside and completely disrespect the rejection block. And that's why I'm just still waiting for it to tap it, at least to show first if it wants to respect it or not.
It's definitely very tricky right now.
Yeah, but it definitely will come back to this area and sweep on the S&P, because while it was chopping up and down like that, it was slowly trending down while chopping, and that left a low resistance liquidity that we will grab at a later time. And that's why I was saying that this trading day that looks like this usually has two biases, and yeah, for the two trading sessions we're gonna have two different biases pretty much. If it decides to sell during AM session, it's most likely that you're gonna buy during PM session, or vice versa. Again, we're approaching that rejection block, but every time we are down there with the wick, we end up leaving a wick and closing way above. So it's not even tapping that yet. And that shows the rejection as well, because those candles are very long to the downside, and then they reject before closing and leave huge wicks. Just left that equal low on the S&P as well.
Yeah.
There was a small void on the 30-second that left at 856, and the candle that we're currently on just went up and filled that void. It didn't react off of the rejection block of the candle of that void though. That means that we're probably now gonna, we're gonna break structure above that fair value gap and inverse it, and that could be the beginning of a reversal right there. Just looks very bad on the chart because of that consolidation that it left and then this move up that it's currently giving.
Yeah.
It makes sense on the S&P though, because of the low resistance liquidity that I was saying that it formed. That low resistance liquidity might be swept now, and we might enter the 30-second fair value gap on the S&P and then give sells from over there, which makes sense because the equivalent of that on NASDAQ would be the inverse that we left at the top when we started dumping the second time around.
That consolidation looks so bad right now.
Yeah.
And we lift the S&P at the high between NASDAQ and S&P. We might go even lower. I don't know.
Yeah, it just swept right now on some of the low resistance liquidity that it had left on S&P, and now it's dumping on S&P a little bit. So it's most likely gonna give another S&P diversion at the lows, because right now the S&P is much closer to the low. If it goes down a little bit more, it's gonna make another lower low, and NASDAQ is gonna be left behind once again. So yeah, this is the area of this is a clear area of slowdown down. So basically this slowdown area is gonna give some type of reaction somewhere, and we're gonna start moving after that.
Do you think that this is accumulation, manipulation, distribution down?
It could very well be, because on the 1 minute it looks like not on the 1 minute, on the 30-second, sorry. On the 30-second, it looks like we rejected a rejection block on top of that fair value gap. So yes, it disrespected the fair value gap, and it went up to the rejection block on top of the 30-second fair value gap, and off of that rejection block is starting to dump. S&P is still making lower lows, and we're pretty much still bearish on both. So yeah, the slowdown was the start of what looks like a retracement right now, because it looks like it's going to continue dumping further down. But yeah, those small little things on time frames like 30 seconds can even predict the beginning of small retracements, which comes in handy.
Okay.
There you go.
Okay. So
there
we
you
went
go,
down to my so we went down to my inverse that I've marked. Let me see if we're gonna get any retracement, or I mean reversal from this point. So I have this bearish fair value gap.
It just gave lower lows on both S&P and NASDAQ. So now where pretty much no SMTs are given at the bottom. If this is a point of interest for a buy, I would like to start seeing first some kind of SMT diversion first.
I want to see this
Or
bearish being respected first, and then
yeah,
going lower a little, and then maybe going up and break it.
yeah, that would be a good idea after that sweep. That candle was definitely a sweep. It wasn't no break of structure or anything like that. So we might very well deliver to the sell side from that fair value gap that I have marked, and then end up disrespecting it if we're unable to break structure to the downside. That's if we fail to break structure to the downside. But if it goes down and it's able to break structure to the downside, then we're gonna continue down a little bit further past the point of interest. That's what I'm waiting for currently, because you know we see that all the time where it does a lower low with a wick like that instead of an actual body of a candle, and that usually indicates some sort of reversal coming, like the one that we're currently looking at. Especially when it wicks into an interest point with that low that sweeps the previous low. If it breaks that fair value gap we're currently in though, and if we break structure to the downside, I'm still holding off to see more sweeping of liquidity before we decide that we're reversing. Looks like it wants to inverse it now. But it's not
liking it.
Yeah, it's not a momentum candle. That's what I was gonna say too. It's not a momentum candle that just went up and inversed it.
Yeah,
you know?
I'm not liking it.
Yeah, it's just playing around the fair value gap. If a strong reversal is coming, I would have liked to see a big momentum candle just break that fair value gap and just continue up.
I might like it now if we reverse.
Yeah, because of that rejection off of the rejection block. Especially because of that long wick that respected the change in the state of delivery. So yeah, we needed to test the change in the state of delivery as well before inversing. So yeah.
Okay, we're going down now. We're respecting it multiple times. But if we
Even
stay in
swept
this
and
area, if we stay in this area for a little and then inverse this bearish fair value gap, I might be interested.
Yeah.
So if we inverse this, no, that's not.
No, that's not the type of inverse that I usually like, but and might be valid. What I like about it that yes, as you pointed out, the idea is very easy to test with a small stop loss, and I take profit on that would make a lot of sense as well because of the equal highs. Although it didn't give a momentum candle up to break it and disrespect it in one take. It did something that I like a lot, where with the wicks of those red candles, when it went down and tested the change in the state of delivery on S&P, it actually made a lower low. So that's an S&P diversion. So now we have an S&P diversion at the bottom. We have an interest point that we entered. We weren't able to break structure to the downside. We just wicked. And now we're inversing. We tested the change in the state of delivery, rejected off of the rejection block, and now we're inversing a bearish fair value gap. So I think now it could be enough confluences lining up for me to actually consider a buy off of this.
So now I'm gonna go to the 1 minute, and I'm gonna wait for this to be inversed, which we already did. This bearish fair value gap on the 3 minutes is not that clear. On the 1 minute, it looks like we have this bearish fair value gap that we inversed, and I really like that momentum candle right there on the 1 minute.
Yeah.
Just testing the idea, putting $365 on the line to make 1,070. I'm looking to add one more contract, just because I want to max my take profit today.
Maybe once we market maybe after a market structure shift and retrace to that massive fair value gap. Yeah, that would be a nice.
I want to see this bullish fair value gap to be respected. If I see this bullish fair value gap to be respected, I might be looking, after we market structure shift, looking to add one more contract and putting my stop loss at breaking.
Yeah.
Here's the bullish fair value gap. That's the inverse. We might market structure shift up and then come back to retest of this inverse. I'm gonna trim. Should I trim? I think I should trim my stop loss just a little bit, because of this massive candle. So putting my stop loss at this low of this rejection block, which is basically an order block. $230, not that bad. We market structure shifted, happened. We should be looking to make, how is the S&P looking? S&P is momentum candles as well, up. That's really good.
After that S&P diversion. Yeah,
market structure shifted up. I don't like this candle. We might retest to this bullish fair value gap and the inverse. So let's see what we do.
That candle right there is the one that just entered the bullish, the bearish fair value gap on the S&P, and it gave a strong reaction off of it. So I would watch it closely now, because we need to disrespect and inverse that fair value gap on S&P for us to continue up further. But it looks a lot like, this could actually be, because we're just a little bit past 9 o'clock, this could actually be the power of 3 of the 4-hour candle. So this is one of those trades that I wouldn't even hold for too long, you know.
Up and down, sweep of liquidity. This is the power of 3 of the 4 hours candle, and then we should distribute up.
Yeah, it's still one of those trades that I wouldn't hold for too long. I would take safe profits on it, just because we're still in that beginning 30 minutes of that 4-hour candle where we like to do go back and forth and make
so
wicks.
We retested the 30 seconds inverse fair value gap. The 1 minute, it looks like we did not go in it. I might look to add here. What do you think? Should I add one more contract here?
Yeah, that would be a good point in my opinion, with a trail to stop.
Stop loss or take profit is like right here. Putting my take profit down. Stop loss. I'm gonna put it under this inverse.
Yeah, that would be good for now. Just gonna go and retest the fair value gap right now, and it should give a reaction off of that inverse that you have marked within the fair value gap. If not, yeah, that would be a close. Just don't like the fact that the S&P reacted so strongly off of that bullish fair value gap, but that's all right because we still needed to retrace down anyways to those highs. A break and retest of that high that started this whole move, which we just did. And by the way, if you look on the left hand side of where that wick ended up being of that red candle, we went into a very small 30-second inverse bearish fair value gap, and we respected them.
I was wanting to add more, like when we.
The only thing is I would have held on a little bit to pyramid or add one more. But other than that, I think if the idea is correct, then this is valid, and we should start reacting up from here and displacing up as fast as we displace down to go retrace. But yeah, it's just not as clean as I like it to be honest. On better, cleaner price action days, we usually don't see that strong of a candle down for retracement. It's a lot slower, so it's a little bit easier also on the psychology of the trader, because like when you see it slowly trailing down to go retrace to something, you know that that's not an actual move with the trend because of the speed of it. You know, when it's slow, you know that okay, it's kind of struggling to go down there, so this has to be a retracement, has to be a retest of something. But when this place is so quick to it, it just messes with you, because you think, okay, now it might actually be the move, because it's displacing down to the retracement interest point for me, instead of actually going there slowly. So it's tricky.
I was wanting to pyramid once we retest this bullish fair value gap and we come down to it. I know we're gonna come down. If we come down to it with like a bearish fair value gap, I was looking for this bearish to be inverse to add one more, but it's fine. If the idea is right, that shouldn't matter, and if not,
Still
I'm
gonna
get
yeah.
stumped out here.
Still gonna play out if the idea is correct. That's right. So either way, it's gonna play out if it's correct. In my opinion, the way it's looking right now, the idea should be correct, because I don't like the fact that the S&P gave them much respect of that fair value gap. But again, another thing to look at is also that the S&P didn't get to the 50% of that fair value gap. So basically, it gave a retracement off of the first quarter of the fair value gap, and for that reason, I believe that we're going up again in that fair value gap to at least retrace to the 50% level, and there we're gonna really see either a rejection or a complete disrespect of it once we enter it again. But I think that it did this on purpose to re-enter the fair value gap a second time, and that second time to break it. I would keep the stop loss like this.
Once we inverse and break structure, I'm moving it
Mhm.
to these lows because
Yeah.
we shouldn't be coming back to this inverse fair value gap again.
Yeah, I was about to say, yeah, on this type of trade, on this type of day, I would keep the stop loss as tight as possible. Every
Mm-hmm.
chance I get to trail the stop loss up a little bit, I would trail it just to be on the safe side, because you never know when the price action is not clean. It likes to reverse moves out of nowhere. So yeah, that's great.
I
I
like
saw
this
that you
green
trailed a little
candle.
bit more.
Yeah, I
Yeah.
like this green candle inverse, or not inverse. If people are shorting this, this would be a terrifying candle for them. So
Yeah,
there it is, and we should go ahead and hit this high pretty easily next. So once we do that, my stop loss is going to be the same at these equal lows, because it will come back to retest this inverse fair value gap. So that's why I'm gonna still leave it as is.
I like the way he's moving now. We need another displacement up above the high that we left the first time on NASDAQ, though. That would be very nice to prove the idea further. That market structure shift right there on top of the above the high of the NASDAQ would be crucial for this trade. If we get that right now, that would be basically the proving of the idea, and also that would start just a quick displacement up to the take profit, without much hesitation, without much consolidation after we get to that point. And I was about to say, yes, that revisit right there after we inversed, I think that was gonna happen. I was about to say that we left a small void on the 30-second that most likely is gonna be filled, and if it gives a good reaction off of that void filling, we could use that void fill as a fair value gap, and it could give a reaction off of that and start beginning to market structure shift up after tapping that void. I know it's very small price action wise, that void, but things like that for me are, you know, big signs that I use when I'm tape reading on a small time frame, you know. So even if it's like, it's probably like less than $1 of price action in that void, but it still holds a lot of power.
Yep.
As you see it, as of right now, it doesn't want to close under it. It wants to leave wicks there, but it wants to close above the void and within the void. If it does the opposite of that, then yeah, that would be a disproof of the idea. Although it's a small void, but yeah.
Okay. Stuff's out there.
You know, that was unfortunate. I think it's due to the fact that the price action is not the best right now. But other than that, I don't think that the idea overall is terrible. As you see, the stop out candle is a huge wick, and on the 30-second especially. And that's very annoying, but it looks like it might have been just a sweep. I'm not sure. We would have to see the candles after that to come and see if we actually keep that SMT diversion at the low, or actually go down and disrespect the SMT diversion as a whole. I don't like the fact that it is re-entering an inverse fair value gap that we had already tapped once and retested. So this might mean that we're actually gonna go down past the interest point, the first interest point that we had, and continue down, which is very annoying. But yeah, a lot of times the market is gonna give slowdowns like that, and then it's not really going to do anything with the slowdown. It's just going to give a small retracement, and that SMT diversion, it's really going to mark the beginning of a small retracement. In this case, this was one of those times where it left an SMT diversion to retrace up a little bit. It went into the fair value gap and then gave sells from that fair value gap. And, yeah, now it's currently dumping just because in that fair value gap, I think the S&P fair value gap one was tapped. It started more selling after that, and we just continued selling after that. In fair value gap, it's very annoying, but it was a risky idea just because yeah, there was low resistance liquidity being swept on the S&P, so it could go both ways. After sweeping that liquidity, it could go above and try to sweep further up, or it just retraces to a fair value gap on top of the low resistance liquidity and then stops out. I think the safest of take profits, to be honest, was that high. In my opinion, that's the only thing that might have been better done, in my opinion. And I know that it's not much of a take profit when we take that buy from that momentum candle. It's probably about, it was still a fair amount. It was 20 handles from your entry to your sweep of liquidity of that high on NASDAQ. It was 20 handles, in my opinion. Could have taken profit right there and maybe called it quits when it entered the S&P 500 fair value gap, just to see if it actually respects it or not. Now it's dumping crazy. The craziest thing. Now the price action decided to move. Yeah, that first 30-minute range of the 4 hours is just pure wick. In my opinion, the power of 3 was to the upside. For that reason, it was a disaster.
Yeah, it's very strange.
Yeah, it's painful because I agreed with the idea actually, and I really loved the S&P diversion that was given at the bottom, and I actually took them by myself as well, because even without you saying the idea, I was thinking of exactly the same thing at the same time. That S&P diversion got me there. I should have either partial doubt of my position, because I entered full at the beginning of the idea. Instead of pyramiding, I like to usually enter with my full size first, and then as I go into the trade, take out some of the risk. Oh wow. Yeah, it went exactly the way I thought it would do. It would go. It went to the 260 mark on topstep X, $260. That I was pointing out for the consolidation to be swept, and it even went below the lowest point of consolidation, which is 237, I think, on topstep X. Yeah, the run up was a manipulation, and now we're pretty much distributing down, or this could be a manipulation down, sweeping the consolidation to the downside first, to then give some sort of buys from down there. I think that's another thing too that could have been done a little bit better before looking for a buy. I think all the sell side liquidity would have had to be swept first within the consolidation at least. So it's probably the first 3 lines that you have drawn on your chart, and those sweeps would have been good for interest points for entries. Yeah.
Went $100 now.
Yeah, crazy, crazy. It really needed to sweep that liquidity. It really needed to sweep that liquidity, in my opinion.
Okay. If we break this with a momentum candle, I'm getting in a buy. Let me see something.
Yeah, it's crazy.
I needed to retrace. I don't have that much stuff.
Yeah, it was a crazy fast move as well. Yeah, something was definitely up when S&P went into that fair value gap during the power of three. Yeah, it was right within the power of three of that 4-hour candle, and then it decided to go um, lower after determining where the wick was going to be above the 4-hour wick. Yeah, after it determined the wick, it just went a direction that it wanted to go in, which is pretty much sweep all the consolidation that it left on the 1 hour and 15-minute time frame. And after that, yeah, it's now currently giving a slowdown. We're within a bullish fair value up on the 4 hours, and we just swept uh, uh, the liquidity, internal liquidity of that fair value gap on the 4 hours. So I think that this would be a good interest point now for a retracement trade, which would be good, because in this case we displaced a lot down. So if we do give a slowdown now, we give some type of an inverse.
Give me a second. I'll be right back.
Go ahead.
but she looks like trouble. Her lips so kissable and poisonous. I know she won't be good for me. But I don't care, 'cause I know it's so rare for a guy like me to get a chance with a girl like her. And I won't waste that chance. 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 'Cause she got me like. Her looks, I assume they come with a price. She's smiling, but that may just be a disguise. I wanna say hi, but I'm scared she'll kill me. Could we? Will we? Would she? Probably not. But I don't care, 'cause I know it's so rare for a guy like me to get a chance with a girl like her. And I won't waste that chance. 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 'Cause she got me low. As I wake up every morning, I wish the day would end, because a day without you in my life, I don't know how to mend. And I was like, eh, 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 oh, 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 oh. You were like, eh, 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 no, oh, no, oh. I was like, eh, 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 oh, 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 oh. You were like, eh, 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 eh.
Continuing the dumb, I guess. The buy trade idea pretty much was a retracement idea. It was maybe against the trend and just a retrace. But they didn't want to retrace too far up above that liquidity that we swept before the huge dump down, and that was it. But pretty much since the beginning of the day, I thought that it was going to be very important for it to sweep the consolidation at the lows, and I think that could actually be a strong breakout out of the consolidation, because we can see that earlier on the hourly chart, the 8 o'clock hourly candle went up, swept the high on S&P and NASDAQ, and we rejected off of the rejection block of the highest point of the consolidation. And after we did that, we started market structure shifting down to head towards the low of that consolidation. So I think that that was consolidation, manipulation up with a sweep of the liquidity of the buy side of the highest point of the consolidation, and then distribution down, and that's what's currently happening. So the safest target for any sell was, you know, some of the lows of the consolidation, because since we're distributing down, then we will sweep all the liquidity first and then continue. And since we're heading that way to sweep, regardless of the bias, whether we're gonna decide to respect something, some PDA at the lows or not, it's safe to say that it's good to take sells all the way down to the sweep of those lows into the consolidation at least. Now with that we dumped this much and that we extended this much down past the consolidation point, we might see some kind of a retracement coming from some PDA, bullish PDA, to retrace a little bit to the displacements that we left on the way down. On the 5-minute, we can see clearly that the dump was initiated after we tapped an inverse on S&P 500, which is basically a balanced price range, because it also lined up with a strong bearish displacement to the downside that left a bearish fair value gap. So the wick in of that inverse fair value gap started this whole thing, especially because of the low resistance liquidity there was on the left hand side of that wick. And after we swept that low resistance liquidity right there with that wick, we tapped pretty much the inverse fair value gap and started dumping down. There might be a start of a slowdown right now and a beginning of a retracement up to some of those imbalances that we left while displacing. And yeah, here we can see on the 30-second that there was this sweep followed by a break of structure to the upside, an inverse, and we're currently testing a void that we left. The beauty of the world, Savannah. Let's all take a walk, Savannah. I'm coming home, Savannah. We'll never be alone, Savannah. The beauty of the world, Savannah. Let's all take a walk. small time frames were just misleading today, just because what looked like to be a good buy for the trade before this was actually just a small retracement before the dump on the big time frames. I think that the best thing to do was to just focus on the big time frames and see the cycle of the market. What cycle of the market are we on? We exited a consolidation cycle with a manipulation up, and then after the manipulation cycle we started to distribute, and the distribution cycle on the big time frames looks a lot like that on the small time frames. Now we have a lot of dumping, and on the small time frames we have strong momentum candles that went down very quick, very long 1 minute candles to the downside, with the very minimum retracements to the upside, leaving a lot of the empty imbalances that we haven't tapped into. We just formed a little bit of low resistance liquidity on the S&P and on the NASDAQ a little bit now, and we might go up and retrace to sweep those sometime soon, after we're done sweeping something major. First, there's some major liquidity on the sell side before starting the slowdown of the market. I believe we should be within a macro as far as I know. I believe we should be into a macro right now. We left the equal lows on the S&P and then went down, swept them with the 1 minute candle 950. We made a new lower low with just a wick, and NASDAQ failed to make a lower low. So now an inverse of this bearish fair value gap would be a point of interest for me, because of that SMT diversion that appeared at the bottom after sweeping the liquidity to the downside, especially because on the NASDAQ we have some low resistance liquidity to sweep. They're very visible on the 30-second chart. Right, so on the 30-second we just inversed we're about to, the candle hasn't closed yet. Okay, now we just inversed a small 30-second bearish fair value gap after the SMT diversion was given, after the slowdown in the market. Currently going down to retesting it after the haven't tapped it yet. Well, now we have currently retested the 50% of it on 30-second, and that's where I would take a buy with a stop loss at the lows on NASDAQ. Depending on how this 30-second candle reacts, okay, no, it's not respecting the inverse that I left. I respected it with the first 30-second candle. After looking at the second 30-second candle that came about, we see a huge disrespect of it, and we went straight down to also disrespect the rejection blocks on the 30 seconds as well. That pretty much means that we're not ready yet for any sort of retracement. So okay, this is a little bit better. Now after the sweep on S&P, we went down and tested the rejection block of the candle that we left at the very bottom. We respected the rejection block, and it's giving us a little bit of a reaction on both S&P and NASDAQ. But again, that's not something that I'm interested in after the inverse was disrespected like that. So yeah, we can see here that the dump is continuing. The disrespect of the inverse was something that I can't just ignore and take a buy, even if there was S&P at the lows. the easiest way to tell that those SMTs are not gonna hold is to just see a disrespect like that of an inverse that's so important, so crucial for the beginning of a move like that. Let's see what's going on time frame, like the 5 minutes. Okay, yeah, we are starting to see the beginning of a slowdown on the 5 minute, but I don't think it's gonna give any retracements as of right now. Not yet. Might actually be one of those days where it just continues on and on and on with the trend until lunch hour, because to be honest, there could be further liquidities to be swept, especially on the NASDAQ having equal low, another equal low from huge wick that was left
So blue three
on
more
Friday,
accounts.
non-farm.
Blue three more accounts, Albert. I don't know. I mean, I see the big dump that it kept going down and down, but we needed to like to retrace to anything. That's why I was like taking a buy here. So maybe like this.
This is the thing though, the buy would be a retracement buy.
Yeah.
And that's the thing, the sell curve hasn't fully completed yet. Like we market structure shifted down below the consolidation levels that we were talking about earlier today. But still, if you go on the NASDAQ, this doesn't necessarily mean that a retracement is going to start right away. It's easier, it's so much easier to take a trade with the trend than look for a reversal, especially when you know what the trend is. If you know that it's a short, then it's better to look for shorts during that run. Obviously now you're in a funny place where like, okay, it already dumped so much down that I don't want to take a short now, because it might very well not give me any take profits and just reverse on me. Yes, that's true, but that's why it's good to take a trade with the trend at the beginning of it, at the beginning of the dump in this case, to prevent that from happening. But we can't really know for a fact where it's gonna slow down and you know, give a little bit of retracement, because like I was saying, there's still equal lows, relatively equal lows at the lows on NASDAQ left from the NFP Friday. There was a huge wick, news wick that went down and didn't quite sweep the low before going up, so it left an awkward, relatively equal low at the bottom that I would like to see swept as well. Just overall, I just overall think that yeah, the best thing for this was pretty much to take a sell with the trend rather than looking for something that's a retracement, most likely a retracement against the trend. And yeah, and the low that I'm talking about, by the way, it's far from where we're at right now. It's at 1854 on topstep X. It's still like $130 away, but I mean, we've seen days where the market just dumps $300 in one day. That's, you know, it's regular price action for NASDAQ on the days where it's expanding. If we're on a distribution cycle in the market and we're just expanding in one direction, then we're gonna see some sort of move like that. In this case though, there's no, like, by the end of the day, I think we might actually get to those equal lows. But again, I wouldn't like to try to guess in which macro timing is it gonna really give a retracement within this dump for me to enter a buy, take a long and take profits. targeting one of the imbalances. It's tough to do that. It's a lot easier to look at the chart on the big time frames and be like, hey, I see that, you know, we're on distribution cycle. We just switched from consolidation to manipulation, and we swept the high on the NASDAQ, and now we're gonna distribute down past the consolidation levels that we left earlier in the consolidation. It's easier to keep up with the cycles of the market and just, you know, follow the big time frames, even if the small time frames are a little bit misleading.
Yes. Let me go ahead and end the stream right here, and we'll pick up at some other day.